Hey everyone, welcome back to A Little Cardinal. Today I want to talk about the stock of UPS. So UPS has come up on my radar for a couple of reasons. First, I've seen a lot of discussion about this stock on sites such as Reddit or Twitter. And I've also had some discussions with my coworkers that have told me that they are also interested in buying this stock. And it's really not hard to see why retail investors are talking about the stock of this company, as right now at the time of recording this video, the company is trading for $84 a share roughly, which is a low that we haven't seen since about 2013. And so of course, when you see a company underperforming the market so much, that usually tends to make retail discussions around, is this a value stock? Is this a value trap? A lot of retail investors start thinking about that, especially when they see the low valuation in comparison to historicals, especially when you think about how the market has been performing. And to me, UPS is another one of those stocks where they saw record performance back in 2020, but since then has just been falling off. And this is what has been happening to UPS. So I want to dig in this company, talk about it, and in the end, let you guys know my thoughts on if I think this is a buy or not at these certain levels. So the first thing I'm going to look at is the fundamentals of this company, look at some of the charts when it comes to revenue and earnings per share. As you can see for the revenue, it has been basically flat the past couple of years. Since 2020, you saw this ramp up over time up until about 2021, 2022-ish, but it's been flat for the past 2 years. Earnings per share shows a similar story as well. You can see that it was kind of flat and choppy in the 2016 to 2020, and then since that you saw a huge ramp up of earnings per share that have only gone and declined and gone back to a normalized level. And really, isn't that kind of what this chart reflects when you look at UPS? It is just really the company kind of going back to a normalized level that we used to see prior to COVID. It really mimics that earnings per share chart that I previously showed quite a lot. And we can see here from their most recent earnings release, their 2025 output, that given current macroeconomic uncertainty, the company is not providing revenue or operating profit guidance, but they did confirm for the following year a few specific things. Two of them relate to give returns back to shareholders, such as the dividend payments and the share repurchases. And one point at the bottom that's really interesting to note is that there is the $3.5 billion in expected expense reduction due to its network reconfigurations. And I looked more into this further, and really it looks like that UPS is really having a turnaround plan around this network reconfiguration. They are trying to improve their profitability by prioritizing higher margin businesses over volume growth, and this is particularly in its Amazon business. From what I've seen, Amazon has been very low profitability or maybe even negative, and so they are cutting ties with Amazon in order to help profitability in the long run, and they are also investing in automation. And so to sum up kind of how I view the company right now, really it looks like UPS is a company that was on an upward trend prior to 2020, but since then, 2020 had a very large impact on shipping, on people buying online, which of course helps their operations. Since 2020 and the effects of COVID, the company really hasn't been able to rebound as well, and they are just returning back to what almost I see as normalization. However, management is seeing this decline as grounds to implement a turnaround plan, and that is what they are in the midst of doing right now. And one important thing to note from management is that if you look at recent insider trades, you can see that there has been 3 recent trades from around the August timeframe, the largest being a $1 million share purchase by the CEO. So definitely the CEO is putting money where her mouth is in regards to this turnaround plan, and with the CEO buying that heavily, I really tend to believe that they think that the turnaround plan will be successful and they will see significant share appreciation. And so now I want to give my opinion on some of the fundamental and valuation metrics of UPS. So looking at FinBiz, a few things stick out to me. First, we have a dividend payout of about 7 to 8% with a payout percentage of 96% right now. And this dividend yield of the 7 to 8% really, in my opinion, is what's driving so much retail interest, as people see a high dividend yield and they start to think that this is a stock to buy up just solely because of that dividend yield. So we have a high dividend yield with a high payout ratio. Looking at the price to sales right now, we are under 1 on this company. The price to book isn't fairly high. Current leverage ratios are not terrible, as we have a quick and current ratio just slightly above 1, and the debt to equity getting high, but I don't find it too concerning. We'll talk about the debt in a little bit. We can see that insiders own 13% of the company with large institutional ownership of about 60%. And currently right now there's a target price on this company of $103 a share. Going over to Seeking Alpha, looking at the valuation grade and underlying metrics, we can see that for the most part, for all of these metrics, UPS is definitely lower than the sector median. This holds true for all ratios besides the PEG gap TTM, the PEG non-gap TTM, and it appears to be the price to book. Other than that, the ratios on UPS to a sector median as well as the 5-year average are for the most part valued right now lower than the median. As mentioned, I am going to talk about the debt, as this is an area that I always look into when I'm thinking about potentially purchasing a stock, as I want to know what the debt is like, because I have gotten burned on highly levered companies before in the past. And looking at the debt, the biggest thing that I notice is that most of the large maturities are happening much later in time. If we take a look at this note 9 from the most recent 10K, we can see that for the most part, starting in 2029 to the 2030s is where you're seeing a lot of principal payments being due. Yes, about $2 million is going to be due in the next couple years, but the company has plenty of assets and cash to cover these ones right now, as we saw from the quick ratios and the current ratios. So I don't really see it too much of a threat right now, especially when if you look at the most recent cash flow, we can see that the company is cash flow positive right now. So the debt doesn't really concern me at the moment. So now I want to talk about the retail sides of things and what I'm seeing on the retail thoughts of this company. Searching in Reddit, I've found a lot of posts talking about UPS and a lot of people asking if this company is a buy. Here's an example of one where the conclusion of this Redditor's post is that they believe that this is a very cheap company at the moment. A lot of the responses that I see to this are either saying yes, they agree, or no, basically due to the dividend payout ratio being way too high right now. And I saw that across a lot of posts that I was viewing when looking through Reddit. And then going to X as well, I saw a lot of more bullish cases for the company. Here are just 2 back-to-back ones that I saw when browsing X. And you can see that both of these have kind of similar points when they're talking about the company being at lows. They talk about the cost cutting. One of them mentions a strong dividend and the CEO buying shares. So again, I've seen a mixed bag of things, as I've noticed a lot of people post positive bullish cases, but I do see some pushback to these in the comments, specifically as it relates to people talking about this dividend yield. And I did do just a little bit of YouTube research as well. I watched this video by Ryan Williams where he looks like more of a dividend investor, and his conclusion really was that he's not interested in the company and pointed to some alternatives. So again, on the retail side, I'm seeing a lot of mixed opinions on UPS right now. So now I'm going to give a few of my analyses as it comes to this company. I do want to share a few things that I ran, just so I can kind of gut check myself when it comes to this company. So I know that I shared in the past that I don't like to really make valuation models, as I don't believe as a individual person I can make anything better than really the big players when it comes to valuation over companies. However, I did just want to share something that I put together the other night in conjunction with using ChatGPT just to kind of feel out and gut check this company. So here is the quick model that I went into. A lot of these inputs when it comes to growth rates and discount rates came from ChatGPT, but I did ask the questions of how were they derived. I looked over it for reasonableness, and overall I think it's pretty reasonable. And from just plugging into this base case scenario, I see a fair value of about $119, which is definitely higher than what was seen on FinViz. And again, I'm not putting that much trust into my own models that I'm making, but I am just gut checking to see if really I'm seeing some sort of upward potential. With right now I'm seeing a 41% Again, I could probably change some of these assumptions and roll some numbers back, but I don't think that over $100 is really that unreasonable when it comes to UPS. I also ran my favorite Z-score analyses that I always show in my videos, and what I can tell right now is it doesn't look like this company is really seeing a significant undervalue when it comes to the PE or PS ratio. Maybe the price to book is significantly lower, but I'm not really seeing very many negatives as I saw when it came to like Centene or TMO and my other analyses. So on a just Z-score standard distribution look of these couple of ratios, there really isn't anything that's sticking out to me that's just screaming undervalued or really screaming that this is a crazy scenario, I guess, that's happening with the company. And so now it's everyone's favorite part of the videos. What is a little birdie's opinion on the stock of UPS? In my opinion, this dividend seems unsustainable right now. This 7% yield with a payout ratio of almost 100%, I don't see it continuing. And that really is the crux of how I see this as a buy or sell right now. I personally will be more interested in UPS immediately after the company cuts that dividend. I believe that if a message comes out that UPS is cutting the dividend, we will see a pretty significant stock decline, as I believe a lot of people are piling in right now because of that dividend yield. So if management either rolls back or cuts the dividend, we'll see a stock price decline. And I think at that point, I would be much more interested in this stock or would take a larger position. I'm not going to say I hate the stock. However, I think that there are probably better opportunities out there right now. Looking at solely just the chart of this stock, this does not seem like a situation when it came to Centene. This does not seem like a situation when it came to TMO. This really does seem like a company almost returning back to what is normal. And so it just doesn't seem like one of those one-off situations where you see a significant price decline that I think is something that's typically where I like to be buying in at. But I am intrigued by UPS. I will say I am intrigued just because of that $1 million purchase from the CEO. That is interesting. And so I am going to follow this stock. I do think I might take an incredibly small position. When I say incredibly small, for the purposes of my stock trading portfolio, that's probably going to be like 1 share or 2 shares. I don't go heavy into single individual stocks. So maybe I pick up a share or 2 at these levels just because I do want maybe just a little bit of skin in the game right now to just kind of follow what the CEO is thinking and follow this turnaround plan. And like, I've spent $80 on a dinner before, so I don't really see this as anything really too risky, anything that I haven't spent money on before. So overall, to summarize my thoughts, I would be much more interested in taking a larger position on the stock once a announcement comes out that they're going to cut the dividend. But for the time being, I will take an incredibly tiny position on the stock of maybe a share or 2 just to have a little skin in the game, just to follow what that CEO is thinking. Because I don't think this is necessarily a overvalued stock. I also don't really think it's a undervalued stock. I think that it is just kind of a normal stock that is trying to implement a turnaround plan. If that turnaround plan comes into fruition, if we see a dividend cut and that lowers the stock price, I think that's when I'll be a lot more interested. So I'm positioning myself right now to take a small position in the hopes that the turnaround happens. But if a dividend cut happens as part of that turnaround, I'll probably buy more, as I would expect to see a much larger decline of the stock price. So that is my thoughts on the stock of UPS. Let me know your guys' thoughts. And until next time, have a great day.